Okay, what is up, everybody? What's up, traders? What's up, tycoons? Today's video, we're going to give an update on Moonriver, ticker symbol MOVR, and we're going to break down actually the entire history of the chart with these chart patterns so that way you guys can learn a few chart patterns if you're not familiar with them, how to identify them on the charts, and give yourself an edge in the market. Trading is like going to battle. It's like going to war. You need to have the proper weapons at your disposal, and you need to know how to use those weapons. So we're going to go over a few things today, and then we're going to break down the critical levels that you need to hold to be able to continue up higher and get a reversal. So initially, what we're looking at here is a bear flag, right? Or a bull flag. So we have our flag pulled to the upside. Okay. And then, this is one way you can draw a flag pattern. Okay. We have our two trend lines right here. We're really just absorbing some of this price action after the sharp move to the upside. And once you break this trend line to the upside, okay, you can expect a move that's roughly the length of the flagpole itself, right? So you can duplicate this drawing, you can clone it, put it over here. You see we end up hitting those targets very nicely, okay? Now, the next pattern we get is actually known as a falling wedge or a descending wedge, whatever you want to call it. And price action is going to zigzag in between this area until we break our trend line to the upside, okay? And once you do that, you can expect for it in a perfect world scenario to hit, the top of where the pattern began. So the pattern starts up here, and you can see we eventually end up coming and hitting those targets. Right. Now, afterwards, what we do is we form a bear flag. Okay. That's the next pattern that we end up getting. So we have our bear flag pole right here. And this is another way to draw a bear flag is with a channel. Okay. So you see we're absorbing really the price action after this sharp move to the downside. Okay. And once we break this trend line here, you can expect a sharp move to the downside. And we had a target of about $6 on Moonriver. Now, keep in mind, this pattern formed in December of 2021, and we recently here hit these targets at the end of December 2022. So it took a whole year for this pattern to play out. This was a much larger pattern, but this pattern started up here right around 400 and took us all the way down to $6. I mean, pretty crazy stuff. Okay, we're actually going to zoom in a little bit more and go over the rest of the patterns in between here, as there was some patterns that took us down to these levels. But if you would have been watching this basically a year ago and seeing this pattern, you could have potentially avoided all of this pain, as these patterns tend to play out pretty well and pretty nicely. So here's that line right there. Here's that bear flag line target. Okay. If you see here, we end up forming a rising wedge, an ascending wedge. Okay. The opposite of the falling wedge. And, you're zigzagging in between here. We're bouncing off the lows and the highs. Once you break this trend line here, you can expect a sharp move to the downside. Now, remember what I said about those perfect world scenarios. It's going to start off where it's going to complete where the pattern began, and we end up doing that, and it becomes a little bit of a support level, and then that support turns into resistance over here. Another pattern that's kind of easy to identify once you're trained and you know what to look for is going to be the head and shoulders. So we have our left shoulder here, we have our head. Once you start to see this staircasing right here, I always start to just imagine that a possible head and shoulders could come, and then you want to see if it actually plays out, right? So once you see this move and we get a pullback very similar to, the previous levels that we were holding, you want to be cautious. If we bounce and we come up to those previous levels of resistance that we had in the past, that's going to be your right shoulder right there, right? So we get a left shoulder, a head, a right shoulder. We break our neckline right here, and then we get a move to the downside. Now, part of that move to the downside ended up creating a bear flag, okay? Now, it's very similar to a lot of the patterns, this head and shoulders, it's going to end where it began. So, we see it begins over here and eventually we come over and it ends there as well. All right. Now, here's where the new bear flag starts. We have our flag pole. We have our channel right here. We're consolidating. We break below this channel, and then we get the expected move, which is just a duplication of this drawing to the downside. And in that process, we create another bear flag, right? So we're just bear flagging and bear flagging over and over. And ultimately, it brought us down to our target here of $6 on Mover, which again was near that initial target from that pattern over a year ago. So it took a lot to get there, but this is how it happened, right? And these were the patterns that brought us to these levels. And so here's where we're at currently on the chart. Okay. This is the recent price action. If you take a look, this is that bear flag target. Okay. From the most recent bear flag I just showed you guys, we ended up coming down and hitting it here recently, bottoming and finding some support and heading back upwards. Now, before we go over the rest of the patterns on here, I want to teach you guys about these three levels, the 61.8, 50%, and 38.2. These are the three major retracement levels using the Fibonacci tool over here. The reason these are so important and well respected is because nothing moves in a straight line up or a straight line down. You get a move up, retracement, continuation higher, or a move down, retracement, continuation lower. Once you spot a trend reversal, right, a reversal is going to be once you break through those major retracement levels, right? So that's what we're looking for currently, is we're looking to see if we can break past our major retracement levels right here, which we'll get into. But before we do it, let's go ahead and visualize how these work, right? So, we come down, we have our swing high up here, we have our swing low, we're connecting these together, and it's giving us our three major retracement levels. We come up to our 61.8% retracement level, and look at what we do. We continue that trend and head back down lower. Now, there was two patterns that we were looking at in between. Okay, we had this triangle pattern here, and the triangle patterns are more neutral. Okay, so you can actually look for a breakout to the upside or a breakout to the downside. So you have to keep your bias out of it, right? You have to be unbiased whenever you see these triangle patterns. And ultimately we did break the trend line right here. If you notice, we got a very textbook break and retest. So what that means is we broke down and then we came back up here and retested that line. And if we would have entered back in this range, we would have had a look below and fail, and that would have been pretty bullish. But instead we got a break, retest, and then continuation lower, right? Now here we did end up getting a head and shoulders, right? So here we have our left shoulder, here's our head, and then here's our right shoulder over here. And the pattern comes down and it ends where it begins. And if you notice, we ended up coming down precisely to those targets after rejecting our three major retracement levels, right? So if we zoom in some more and just look at some of the current and most recent price action, you can really start to understand it a lot more by using these Fibonacci retracement tools, right? So we have our swing high right here connected down to our swing low. You see we have this sharp move to the downside, and we come up and look at where we're getting rejected, right around our 38.2 retracement level. And then we continue that trend, right? So that's what it's useful for. The fibs are useful for spotting trend continuation or trend reversals. Currently, we're in the process of attempting a trend reversal and a breakout, right? So we have our new swing high over here connected down to our new swing low. We have the sharp move to the downside. We've retraced up, and look at where we're battling. We're battling our 61.8% retracement level as resistance right now. So if we're able to break out past this level, which the level is going to be 8.3583. That's the major retracement level that we need to break out past right here for us to, possibly get a reversal and start making a high and then a higher high versus a high and a lower highs. Okay. So, that's what I'm really looking for. If you pay attention to the RSI, which is your relative strength index, it measures the relative strength of a token at its given price, and it tells you when things are overbought or oversold. The technical definition of overbought is going to be this dotted line here, which is 70. And if you take a look, the RSI currently is 71.63. So we're in overbought territory. It really wouldn't surprise me if we get some type of a pullback, but just because something's overbought doesn't mean it can't continue higher. All right. We've already started to pull back a little bit. We wicked up here above our 61.8% retracement level, but it's still acting as strong resistance, and we're currently trading below it. Now, if we can manage to break through these levels, right? So even if we pull back a little bit and we consolidate within these ranges, we have 7.89 and 7.42 as some major support levels now after breaking out past them. We want to continue to hold these as support. If you notice here, where this candlestick opened up right there, that's a good sign. All right, we want to, really just consolidate a little bit and then ultimately get that breakout that we're looking for above 8.3583. If that's possible, we could come up here and test some of our previous highs on the chart, which is going to be right around 9.86 and then also 9.55. That's going to be kind of like a little zone that I would watch out for as some resistance. And if we're able to get past above those, then we've started, a trend reversal where we're making higher highs versus lower highs. Okay. So if you look here, we kind of already on a smaller scale have started to make some higher highs, right? So we have a high here, we have a high here, we have a low here, we have a higher low here. So short term, we have started a little bit of an uptrend, but we want to see it continue, right? We want to see another higher low, and then we want to see another higher high is really what we're looking for to ultimately try to get some type of reversal and really create a higher high from this high over here. So, we went over a lot in the video. Hopefully you learned something new. If you did, make sure to smash the like button and subscribe to the channel. I do viewer requests every single week. So if you want to see your token, your cryptocurrency in the next video, all you got to do is comment down below and I'll make a video on it for you guys as soon as I can. I appreciate you making it this far. If you did, you're probably going to enjoy one of these next two videos as well. So make sure to click on those.